contracting? What kind of is your guiding principle when it comes to that?
So that's a really good question. Well, remember the general overlay rules is the market has to be in a strong uptrend, and it's got to be a forgiving market, because a strong forgiving market is going to allow you to get away with a lot more. So you don't want to try this if your market is weak or beginning to break down. If that starts to happen, or if I see evidence that my win-loss percentage is starting to get worse, and normally when I'm on and I'm trading well, I don't have a lot of losses. I mean, I have gain after gain after gain, and with this, a few intermittent losses. But when things start to change, and the market's rolling over, if I haven't rotated well with the market, I'll start to see loss after loss after loss. And that's my best indication that something is happening in the market. Either the general market's getting weak and everything's moving down, or we may be rotating sectors and I'm in the wrong stuff. I think that's one reason why this year has been quite difficult, because we're in a bull market. I mean, you can't say we hit a new high and not admit we're in a bull market, but the market for the O'Neill type stocks and growth stocks went through a bear market. And so if you didn't transition quickly out of those and into, kind of the reopening trade and kind of reinflation type stocks, then you might not be doing so well. So, the best kind of market to employ a pullback strategy is a forgiving market that rises all boats, not a rotating bull market where you've got to be in the right place at the right time. So yeah, I'll look at my other stocks, and I'll look at the sectors, and if things are breaking down and getting weak and breaking down below levels of support, then I'll stop employing that strategy, because I'm getting indications and clues that it's out of favor. And I won't, once you see enough evidence that support is not working, stocks are not holding as support, you definitely don't want to try the strategy, because you're going to lose and lose and lose.
Right. And I was wondering if you ever played pullbacks to the 200-day moving average, because looking at the Tesla chart last year, it pulled back right to the 200-day, had a nice upside reversal, and it also was the confluence of the prior base high. So I was wondering if you ever looked at that as well.
I normally don't buy off a 200-day, because at that point, the stock is no longer in an overall uptrend on a shorter term basis. It's more of in a base building period. I do still have a core position in Tesla, and a lot of bad would have to happen for me to really unload that stock. I think personally, I think Tesla's a stock I'm treating differently than pretty much any other stock I've traded in quite a long time. And again, last year was such an extraordinary year, and I did so well with it that